Welcome to the Late Finance Show. I am your host, Maria Vega, and today we have an extra special treat for our viewers. As part of our series where we take a deep financial dive into a specific company and then recommend whether you should buy, sell, or stick with your shares. This time around, we will be talking about pharmaceutical giant Sanofi. Let us welcome our three experts who will carry this discussion. CFO of Sanofi, Mr. Raymond Lin. Renowned journalist from the Financial Times, Ms. Laurea Artola.
Good evening.
And our own expert from the Late Finance Show, Ms. Ilona Duvois.
Nice to be here.
Let's start with a bit of background on this giant multinational. Mr. Lin, thank you for joining us all the way from Berlin. Could you give us a bit of context on Sanofi?
So, thanks for receiving me. No, Sanofi's headquarters, Paris. Wait. Yeah, Paris. And which this company is the French multiple pharmaceutical company ranked at the 10th highest value proposition in the pharma company. And this year, since it has net profit 2.3 billion up until third trimester and has engaged researching, development and manufacturing. So as you can see, after sales, which reached to 10.4 billion euros for the first time, slightly exceeded the expectation and analysts polled by fastest in the Bloomberg.
Great, thank you, Mr. Lin. Ms. Artola, could you please tell us about the financial history of Sanofi?
Yes, of course. When we view the last 12 months of share prices for Sanofi, it seems that the last year has been a bit of challenge for the pharmaceutical giant. If we take a look at the share price during 2021, it would appear that the lowest share price value was 75.35 euros in March 2021. Prior to the pandemic, Sanofi was the world's leading vaccine manufacturer. But the French company has been displaced by competitors like BioNTech and Pfizer and Moderna in the race to develop a mRNA COVID-19 vaccine. That's why, in September, Sanofi decided to focus on developing a more conventional protein-based vaccine in collaboration with GSK. The new GSK Sanofi vaccine could be approved as early as the upcoming December 2021, which should launch the French multinational right back into the vaccine race.
Wow, so despite being a giant pharmaceutical company, Sanofi seems to have faced steep challenges during COVID. With the launch of their new COVID-19 vaccine, though, we might continue to see a rise in share prices. If we turn the focus towards growth and profitability, do we also see a positive rise, Ms. Dubois?
Indeed, we can see that Sanofi is slowly recovering from their 2020 and beginning 2021 slump, with the company's third quarter results exceeding analyst expectation. The company reported earnings per share of 2.18 euros against expectation of 2.98 euros and a turnover of 10.43 billion against forecasts of 10.36 billion euro.
Interesting. So all the stars seem to be aligning for Sanofi investors. But just to be sure, let's talk about Sanofi's main financial indicators: return on equity, return on capital employed, and weighted average cost of capital. What do you interpret from this year's results?
First of all, let's talk about Sanofi's return on equity, so ROE. In 2020, its ROE value was 12.1%. In 2021, despite COVID-19 crisis, Sanofi ROE remained stable and even increased slightly by 0.5%. This higher ROE means that Sanofi manages to maintain efficiency, thus providing its attractiveness for investors. Let's interpret these numbers. An ROE of 12.5% means that 100 euros contributed by associates or shareholders generates 12.5 euros of net profits. If we compare Sanofi's ROE with an average ROE for the pharmaceutical sector in Western Europe in 2021, we can see that the sector average ROE is equal to 14.95% in 2021. Despite its good ROE, compared to its European competitors, Sanofi seems to be a bit under on average. Now let's talk about Sanofi's return on capital employed, ROCE, which is equal to 8.2%. The pharmaceutical industry average ROCE is 13% in 2021. One of its competitors, Johnson & Johnson, reached an ROCE of 15.9% during the same period. This comparison enables us to assess that from an investor's perspective, it will appear that other companies in the pharmaceutical sectors, such as Johnson & Johnson, are outperforming Sanofi in terms of profitability of projects launched this year. To finish with the analysis of Sanofi's financial indicators, let's have a look at its weighted average cost of capital, the WACC, which is equal to 3.5% in 2021. It means that shareholders demand 3.5% of return in order to provide the company with capital. Furthermore, we can see that ROCE is larger than the WACC. It suggests that Sanofi created value over 2021, so it's good for investors. If we compare it to pharmaceutical industry, the average WACC was 5.5%. As Sanofi WACC is a bit under, it means that the company is perceived as less risky by investors than other companies in the sector.
So, if we understood correctly, Sanofi seems to be in a good financial health, and with a debt-to-equity ratio of only 0.32 or 32%, it seems they depend much more on shareholder investment than taking out bank loans. Therefore, the risk for high debt seems to be quite small. As of today, however, the price-per-earnings ratio for Sanofi is only 8.5, some of the lowest in the history of the company. Do you think we can expect a significant increase for this ratio next year?
Yes, Maria. The predicted average price-earning ratio for Sanofi next year is around 18, which takes into account the launch of the new COVID-19 vaccine with GSK, and yet another COVID-19 vaccine using RNA in development with Translabio. We can definitely expect an interesting growth for Sanofi, both from a sale and from an investor's perspective.
Alright, so what would you recommend to our viewers? Should they keep their shares, buy more shares, or sell their Sanofi shares?
I think it is safe to suggest people to cautiously increase their investment in Sanofi. Also, we know that pharmaceutical company is a safe bet according to the numbers, and so we wouldn't advise anyone to sell their shares. We also hesitate to enthusiastically push investors towards Sanofi because we know that they have let us down in the past. Sanofi's failure to deliver an mRNA vaccine before or at the same time as Moderna and BioNTech Pfizer was a huge disappointment for those of us who support French pharmaceutical R&D, and we would be amiss to ignore Sanofi's past in spite of what seems to be a promising financial future.
I would agree with your sentiment that investors need to be careful, but I do believe that the steady rise in share prices this year should indicate a profitable period for Sanofi next year. And we look at Moderna and Pfizer's financial benchmarks, we can safely bet on a similar growth for Sanofi if they manage to release their vaccine in Q1 2022 as promised.
The main question being if they manage to finally release their vaccine. So, there you have it, our experts' opinion on whether you should or should not invest in Sanofi. The consensus seems to lie on buying a bit more shares conservatively. Thank you, Mr. Lin, Ms. Dubois, and Ms. Aquila for your time. See you next time on The Late Finance Show, where we will analyze Air France's financial situation. Will they crash and burn, or miraculously rise from the ashes? Stay tuned and find out. Thank you, and good night.